You want an investment edge, but all you hear is noise, hype, and half-truths. Every signal is solid information, but only if you can see the bigger picture. This is where the Quasar magic happens. Weather, charts, news, all financial signals funneled into a single dashboard. Data alone isn't enough. Quasar Markets turns it into energy, sharp, clear, precise. Optimize with Quasar Markets today. Your edge when investing.
Good morning, traders, and welcome to Quasar Markets Live, your go-to destination for real market intelligence, price action breakdowns, and macro updates that actually matter. My man BigBeat is out on a boat here cruising around the Caribbean today, so I am here solo till about 9:30, and then Mr. Flanagan himself, the man, the myth, the legend, is going to come in and help me out a little bit. We are here Friday, July 25th, and we're heading into the final section of the week with the S&P 500 and the NASDAQ clinging to record highs, while the Dow Jones is under a little bit of pressure following disappointing earnings from both Intel and Satine. Plus, Bitcoin is rolling over and bond markets are flashing signs that the macro narrative might be changing a bit. So let's get a little bit into it here today. As you can see, I have the S&P, the SPY, up on the chart here. Where we stand right now, right about 634.42, up about 9 basis points, and just below all-time highs. All-time high 636.15. If I switch over to the NASDAQ, that we look at the QQQ to do that, sitting right in at about 564.87, excuse me, down slightly from overnight, but still being driven by mega cap tech strength for sure. Dow Jones has been dragging a little bit down, about 70 basis points here. Like I said, being dragged down a little bit by Intel. We'll talk more about them, Centene and Charter. We just got durable goods orders in today, so let's turn to their numbers for June. At first glance, the headline number is a pretty big miss, down about 9.3% here. But, context is key, and most of that drops due to one company, believe it or not, Boeing. Volatile aircraft orders being blamed for this slowdown. Markets were actually bracing for worse. The economists had forecasted a drop of about 11%, so this wasn't a complete surprise by any means. But the more important number is what we call the core capital goods orders. That's non-defense aircraft, which serves as a good proxy for business investment. And that did fall even on that metric by about 0.7% after a strong 2% gain last month. So while we were seeing some strength, this latest dip could suggest that companies are getting a little bit more cautious with their CapEx, especially amid higher for longer rates, which it looks like we're in for here, and the political uncertainty headed into the fall. On the flip side, core orders, excluding transportation, were actually up about 2 basis points here this morning. The third monthly increase, showing underlying momentum, is still holding up outside of lumpy sectors like aerospace. So, it was a little bit of an isolated issue. The economy isn't rolling over from what I can see, but we are seeing signs of maybe a pivot from expansion to caution, especially when you look at corporate spending outside of Google and a couple of others. CapEx has come in a little bit light, to be honest with you. So the Fed will be watching these signals, we know, as they weigh their decisions heading into September. Another interesting article I thought that I would discuss here or bring up this morning is mega cap dominance, something we've talked about here on the show. And one of the reasons that I do think that we maybe have a little bit more staying power than BigBeat feels is that right now, and I want to give credit to Tarson Slock over at Apollo Global. He dropped this stat this morning that I saw. If you invested 1 million in the S&P on January 1st, 2021, over half of your gains to date would be all held in just 10 stocks. I thought that was a rather interesting one. And I'm going to put up here on the screen what those stocks are. And they include what I would call the usual suspects: NVIDIA, Apple, Microsoft, Meta, Google, Amazon, Tesla, Berkshire Hathaway, JP Morgan, and Broadcom are responsible for over half of the gains in the S&P since 2021. Bottom line, the S&P 500 is not diversified. It's dominated, right? And should be a matter for risk management and asset allocation going into quarters 3 and 4. So if you're feeling that some of those names are a little bit overbaked, be careful if you're in the S&P. And we're starting to see is a little bit like we saw in the Qs, where they were really led by that Mag 7, right? These 10 names are a big part of what is moving in the S&P, or more than half of the gains in the S&P. So, just be a little bit wary of that. Understand that is, what we're seeing here. Let's get into some of the early morning movers so far today. Just something on my screen here. First one that I want to talk about is Comfort. Symbol FIX. Comfort Systems had their earnings today. Q2 EPS up 70%. They're up. Oh, I should point out, first of all, performance-wise, up about 15.47 here, getting ready to blast through their all-time high, which was 565, all the way to 650. So just an absolute moonshot here. You can see the open is barely in my screen here. Looking to open up that far. And again, Q2 earnings per share up 70%. They raised their dividends, 2.17 billion in revenue, topped estimates by over 10.6%. Their GAAP EPS came in at 6.53, about 36.6% above consensus. And for H1, their net income rose 11.28% per share, up from 6.43 in 2024. With that being said, as bit bullish as all that is, the board raised the quarterly dividends up to 50 cents, up a nickel, another 11% increase. Company also is expanding its stock buyback program, targeting 1 million shares. And what they talked about was outstanding backlog. It hit 8.12 billion. That would be averaging 29.5% year-over-year growth over the past 2 years. Analysts expect high margin demand, particularly from data center construction and consumer HVAC. D.A. Davidson raised their price target on fixed to 630. So again, just absolutely moving to the upside. It is funny. When I first started to look at this morning, I'm not going to lie, I thought that this was an apparel company, a footwear company, quite honestly. And then I thought it was Stitch Fix when I saw the symbol. But this is an HVAC company dealing in data centers. And, these are the plays we talked about. And this wasn't one of the ones that I saw. I closely watched NVIDIA's earnings because they give you a good sense. They're partnered with Carrier for this. I wanted to, I look at those for what we call channel checks to see, if maybe we can find what the next one is. But this was definitely the one. Huge increase in construction, and it has just absolutely taken off. Now, getting into apparel, and I think the other reason was that I had looked at other apparel companies first before looking at that. Decker up almost 13%, 12.32. It has pulled back a little bit. It was up over 13. And Decker Outdoors, for those that don't know, they said that their Hoka and UGG brands are outperforming. Brand loyalty and margin strength were big. EPS came in at about 93 cents versus an expectation of 68, if I'm not mistaken, right? 68. Yeah. And their revenue came in at 965 million, as you can see, estimated to come in at 938. So again, nice beats. Footwear demand, especially for their performance line, like Hoka, which for those that know is a running shoe in general, and CrossFit type stuff, is proving durable even in a mixed macro backdrop. And from sandals to the stratosphere, that's where they're going, right? So nice move up here, 117.90. We'll point out that this has been a stock that's been beaten up pretty hard here. Was trading just back here in January of this year at about 222, and just absolutely blasted to the bottom side here. Now looking for some recovery. For me, I would want to still see it break this 200. What you have right now, in my opinion, is a run to the 200-day MA could be in order here. So you could look for a run up towards that. I mean, first set of resistance you're going to see. So it's pretty good trade here still. If you like it, 118 for a run up to 130. If it breaks that 130, walk for a run to 146. So decent upside on Decker. A lot harder to call that type of thing out on Fix, which just went, astronomically to the upside, parabolic. You're probably more there. I would be measuring out Fibonacci levels and looking for downside more than upside on that. Good morning, Zora and Ron. Ron, were you asking about the ticker FIX or the ticker DECK? Sorry. FIX was the first one. Sorry, when you guys write some notes here, when I'm solo, I'm watching 4 screens. So FIX was the first one. What I'm talking about now is Deckers. But nice move up. Another one that I am a little surprised at, especially after we've seen Constellation and some of the other beer companies have their earnings reports and not be so forward-looking. Sam Adams up about 11.24%, and that's moving up this morning because it was up 7% when I put my notes together here about 8 o'clock. They had a Q2 beat and less than expected tariff impact. Cheers from investors. Surprised Wall Street with a stronger than expected second quarter. They posted a revenue and earnings beat. So let's pull those up here. And you can see they came in with earnings. Estimates were 3.86, came in at 5.45. So a 41% beat on EPS, a slight beat on revenue. Tariffs were milder than expected on packaging and ingredients that had been a concern. Q2 showed lower than expected cost pressure, they said, and that was a key positive catalyst for the move higher. Brand momentum, Twisted Tea and Hard Mountain Dew were cited as strong performers. I am a big fan of Twisted Tea, believe it or not. And I will tell you, I did notice they came out with a light. So I did notice they have expanded their offerings there. And I didn't realize they were the team behind the Mountain Dew hard seltzers there. Core beer volumes, like Sam Adams, were flat, but they didn't drag on the quarter. So unlike what we saw from Constellation, Modelo, and the Mexican beers, or what we saw from Molson Coors, more the American beers and Canadian imports, that we see Sam Adams has isolated themselves from a lot of their tariff issues, and that they're having strong growth still in some of their sectors, which is surprising because there is not, I will tell you, the beer sector is one of the sectors that has been sort of underperforming over the last several years as consumers switch to other products. There are a couple others that I'm watching here today on the upside. Carvana up a little bit over 2% here. Just got an outperform by Oppenheimer. The notes highlighted the company is now generating meaningful cash and that its model is finally humming along. This is part of a broader theme of selective optimism in the online retail for cars in general. And this one's just been an outperformer for the last several months and continuing to try to move back to the upside. Again, I'm more interested in, bottom of the linear regression here on the daily chart, held up like a champ, trying to regain the 50-day MA right now. So to me, this looks like a solid area from a technical standpoint for an entry on Carvana, even after the move up. So one I am keeping an eye on today for sure. The other one in the news to keep an eye on today is Paramount. That is not them. And Paramount, their FCC has given them the green light for their merger with Skydance Media. So they were up slightly, not a big one, but I would be keeping an eye on it. Could be an interesting one to watch later today. To the downside, I mentioned them earlier, a couple of them. CNC, which is Centene, down here. And well, now it's up 2.5%. Was down 12% earlier. And they had a shocking quarter 2 loss here. Actually lost money. I'm looking for my notes here. Yeah, surprise loss of 16 cents per share versus a street estimate of 11 cents per share in profit. They said membership declines in Medicaid and Medicare were sharp. Revenue was a positive surprise, but clearly margin and growth visibility are suffering. The CEO called the quarter disappointing and said a turnaround is now a top priority. But that one is bouncing up here now. So that one we've seen the buy the dip buyers already step in. Surprised by that a little bit. Like I said, just an hour ago or so, we'll be able to see this pump right here. You can see here just at 8 a.m. this was trading at 22.82. So someone's jumping in here and has some belief in Centene. It isn't me. So that one has changed. Intel is the other one that is definitely weighing on the markets today. Down about 8.22%. They did have, if I remember, a slight revenue beat. Yep, they did they were expected to come in at about 12 billion, came in at almost 13 billion on revenue, but they had some EPS, a huge miss. Actually, again, another negative EPS here. It also announced it will cut 15% of its workforce and scale back chip factory plans. So we all know over the last year, Intel saw some good tailwinds by the fact that they were one of the companies that was going to get some big money from the government so that they could expand their functions here in the U.S. and their factories. But this is definitely a setback. It said that they're part of their strategy is to refocus on AI, but the market clearly sees this as a defensive retrenchment, not a aggressive pivot. So it's a signal that margin pressures and R&D investment strains are very real. And watch for NVIDIA sympathy moves or AI hardware segment rotation. So keep your eye on the chips today with Intel having this in the pre-market so far. Most of the chip companies were down. NVIDIA just slightly, but you can see ASML down about 2% here. AMAT down over 1%. Intel's leading the way, but in general down. Broadband, AMD, ADI are trading to the upside slightly. Next one is a company that I've mentioned over the time I am not a huge fan of is Charter Communications Cable, down about 14% here. They did came in right about at their revenue estimates, but they missed estimates across earnings. And they did say that the broadband competition is heating up. They missed EBITDA by about $10 million. And, in a market that is very reactive right now, any miss is being punished. Analysts will be watching subscriber metrics and churn closely today in today's call. So we'll see what we get there. But Charter definitely get hit here to the downside. We'll mention too, TikTok Commerce Secretary Howard Lutnick was on earlier today on across, I think it was CNBC. He did say that they are drawing a hard line that TikTok must sell its U.S. operations by September 17th or face another ban. So it's going to be interesting what we hear or what we get out of that. Let's talk a little bit about crypto. Bitcoin took a pretty big dive overnight, trading at about 116, 142 now, pulled back all the way to 114, 750 before bouncing here. So we definitely saw that drawdown about a 3 to 4% between, late yesterday and earlier today. It had been really range bound, trading in a tight range between 117, 250 and 120. This breakdown still a healthy contraction. I'm actually looking myself to pick some up at that 13.5 level. That's where I'm doing that. So that's the level I'm looking at here. Liquidations did pick up. Open interest has come down. So we're seeing some deleveraging out of both sides. Some of the shorts have taken their profit and ran, and some of the longs have capitulated, but healthy move so far. And to break back above 117, 250 would be rather bullish today. Anything above that, like I said, above 115, 400 or so keeps you above the 50% fib retracement level and keeps us in the game there. No more economic data on track for this week, so that is sort of done. We'll talk about next week with Mr. Flanagan when he comes in. But we do have a bunch of big earnings still coming up here to keep an eye on. Did want to talk a little bit about tariffs also here. In watching some of these earnings reports over the last few days, what we do see is that, tariffs have been discussed, been in the forefront of everybody's minds, but how are they actually playing out across earnings? We just mentioned that when it comes to Sam Adams, they've been able to mitigate them, and that's why they're having the strong move up today. But that isn't the case with a lot of others. We're no longer speculating about how this trade war is playing out. We actually see it getting reported in the earnings numbers. Some of them that I wanted to bring up here, Volkswagen being one of the bigger ones that talked about it, And what we see is, they downgraded its 2025 guidance. They said look for about a $1.3 billion or billion euro hit from U.S. tariffs. That's not a rounding error for them. That's enough to swing entire divisions into the red. Operating margins seen now just at about 4 to 5%, down from their earlier estimates of 5.5 to 6.5%. And the expensive cars, we talk VW, but Audi and Porsche are the ones that are mattering the most, got hit hardest. Audi's operating profit collapsed 64% through their earnings. Porsche, which is the crown jewel of the VW group, started jaw-dropping 91% decline in operating profit. Even with these drops, VW did manage to beat earnings forecasts thanks to early year performance, and shares were actually up about 4% today on the bounce from that news. But again, we are seeing the tariffs start to play out. Another one that I have here, LG Electronics. They are starting to feel the chill. They beat profit forecasts but missed on revenue, and they were very explicit in blaming tariffs and weak U.S. consumer sentiment, especially in the flatlining TV market. And I will note, I have noticed that I've been getting a lot of offers from Best Buy and other companies with ridiculous deals on TVs. So this does seem to play out with what I'm seeing there. And again, they said that they're now pivoting hard into automotive, electronics, and HVAC because they are less tariff-sensitive sectors. So That's what we're seeing there. We are about 1 minute from the open here so far. Tick is slightly up, advanced decline up about 1,000. Qs look like they're set to open flat. SPY slightly up, like I said. Dow looking like it's going to open to the downside. So let's stay here on the Qs as we get into the open. Here we go. We are open. Q's first move is slightly to the downside. Not too bad here, down about 3 basis points. But it does look like first move a little bit to the downside here. So you can see that most of yesterday, we really got to get back into that 565 area is where we've seen more buyers than sellers in general. Still getting hit here. Gold at 33.44. So gold moving down slightly. Also, we said Bitcoin just broke below 116. So sell off here a little bit there. I'll be interested to see here. I have it on the screen. What the ETFs do here quickly this morning is going to be a big player in how crypto plays out here this morning. And IBIT getting hit pretty hard here on the open, down about 2.58. Down further than most of the others so far. All the Bitcoin mining companies, of course, on this news opening up to the downside here. They could be some pretty good buy the dip candidates. Bitcoin moving down even further here, 115,950. So we are still seeing weakness come through. So pretty much a repeat of what we saw last night starting to play out again when it comes to crypto. Tick still slightly negative, down about 112 right now. Advanced decline is at 840 on the positive side. SPY broke to 635.07, so not an all-time high here, but pretty close to that. Dow Jones has actually made that move to the upside, so that bounce back by Satine definitely helping the Dow here. Right up about 20 basis points also. Sorry, taking a look at here to see if anything's hitting any of my scanners for it. Not a ton of excitement so far. Palantir, nice move to the upside here. UNH, you guys know I bought that yesterday on the show. I am staying long. Steve got out. I'm in it for more of a long-term play, but nice move up about 1.55%. I'm in at right about that 284 level, so I am right about my entry level here. Bitcoin is bouncing back. So after that initial sell-off across the ETFs, we are seeing now a nice little bounce to the upside here. We'll say Ethereum held up very strong overnight. Didn't really dip down, gave me no opportunity for a buy the dip there, really. And now recovering and looking to move to the upside here. Do you think Ethereum looks better than Bitcoin so far today? On the Mag 7 so far, as we said, NVIDIA down, a little bit of a sympathy play towards the Intel's miss. Apple up slightly, 37 basis points. Microsoft virtually flat. Google up slightly, but seeing a little bit of a fade here. Amazon up 32 basis points. Meta, Tesla, a little bit of a recovery here, 310.24. So after hitting a low yesterday right at about that 300 level, it did bounce back here a little bit, looking like it has a little bit of strength today, trying to break out, quite honestly, right now. Tesla could be an interesting one to watch today. Keep an eye on Eli Lilly today. Hearing looks like it wants to make a breakout. Broke through the 200-day MA yesterday, held above that. So juicy upside here on Eli Lilly, in my opinion. In fact, I might go after a little bit of Lilly here. See what it looks like. That is an interesting one. So Eli Lilly might be in play here. See if we get a bounce out of these Bitcoin miners. It does look like they are bouncing back again. First move was quickly to the downside. IREN looking pretty good here. IREN is at a nice spot, maybe for a little bit of a swing trade. Bitcoin, nice. 116,545. Like I said, that 117,250 would be a real nice zone to break up to. Any move above that would be real nice. And in general, we're seeing a pretty decent move to the upside here across crypto here this morning. Let's take a look at our early morning risers. What's pumping here today? Deckers, as we talked about in the open, up about 17%. Nice move to the upside here. A couple of healthcare companies moving up. What else do we have? Coca-Cola up about 8.53% here. Newmont Corporation Mining Company up about 7.27% here this morning. Nice move to the upside there. Penn, which is Penn Entertainment, the gambling site. We saw LVS and a few of the other gambling sites move up nicely yesterday. Penn Gaming up nicely today, about 4%. Let's take a look at the laggard, see if there's anything that interests us on that side of the game. I mentioned Charter Communication. I'm not a fan of them, down about 13.2%. ASTS, woof, down about 9% here this morning. I'm not mistaken. That's actually, well, it was a move back up from the bottom. You can see hit 52.42 here late yesterday. Galaxy Digital down about 5%. Not surprising with the Bitcoins drop here. So Bitcoin miners getting hit here. Galaxy Digital does a little bit of everything in the crypto space, but Bitcoin mining and others. Tesla continuing to move to that upside. That's the breakout so far. The Mag 7 up about 2.18% here. So we definitely see that starting to move. Let's see what else we've got. Not seeing anything too exciting in the laggards that I necessarily want to chase. Not really. Like I said, you can buy the dip on the Bitcoin mining companies. That's about all I'm seeing there. CVS, nice move up, 3.78. Humana, so after Centene dumped and had a lot of those following, now has all this stuff moving to the upside. So Palantir up about 2%. As I mentioned, Tesla up 2.22%. So still seeing some strength. Seeing all that much else. See what it's saying here. Tick has moved slightly negative. We see Qs are down about 5 basis points. SPY is up about 14. Hasn't been able to break to a new all-time high. But do it. It does look like President is tweeting. Trump, Japan wants to have a weak currency. You know, strong dollar, you can't sell anything. So now he's mad about DXY today. Trump said, Powell told me economy is doing well. Powell will lower interest rates. It looks like yesterday's visit screwed them over a little bit. Okay, I see he's come into the room. Let's bring him in. Mr. Flanagan himself. Steve, how are you doing today, my friend?
I'm doing well, Howard. How are you today?
I'm good, man. I'm good. Markets are still showing a little bit of steam here.
Yes, they are. We're knocking off one trade deal at a time. Optimism is up here for the EU and the US to get a deal done. Let's see how it goes. I had talked on Monday, and Wednesday about this, the overhang of the uncertainty. Well, dissect what uncertainty was. The U.S. budget, that's done. Now trade deals. Okay, we've got a half a dozen done. Let's get some of the bigger ones done. I think we're holding off on India because we're waiting for the talks next week in Stockholm with China. I don't think they want to come right out of the gates here with India because that's going to put a lot of perhaps pressure in the deal making with China. So I think, we'll see something from India next week. And that'll be, kind of let's call it the trump card in negotiations. But I do see some positives. The dollar index is holding here. 97.70, still well off of last week's level of closing on Friday at 98.46. So nothing to, begin. The dollar still is a sell on the rally if we look at the technicals.
Right.
However, we do have a higher low in place. So
you got a little cup and handle maybe forming here. We can get back to this 98.56 area for sure.
Exactly. And I would say 98.95 is the break point because that would set up a higher high. Until we get above that level, it's a sell the rally. As much as I want to be my dollar bull, I'm going to respect what the price tells me because the data don't lie. And it says that right now, I see a basing pattern. I am long dollars right now, but it's a smaller position, which would be added to on a break of that 98.95, because that would then be a charting change in the history or the price action, which would indicate I want to get in this move.
Absolutely. You brought up the trade, so on that one, it doesn't seem to be moving the needle tremendously one way or the other when it comes to the trade. It looks like that exhaustion across the market is sort of built in here on it. Nothing too exciting, nothing too boring. Nothing. It's not too positive, too negative. He's not having as much of an effect as I thought it would.
No, because everybody's waiting for the next shoe. Let's just go back to January and what's transcribed throughout this year. You guys have Quasar Markets has, psychologists that come on and talk about, the inner makings of a trader. Well, we've been force fed tweets, um, data, and everybody is sitting waiting for the next tweet or the next headline. And that's what's moving our markets. The forward thinking part of our markets, the Fed has already entrenched that there is no such thing as a forward thinker anymore. But in the marketplace, people don't, let's say traders don't get rewarded for the forward thinking per se. Institutional large traders, yes, they do, but the market at large does not. So we're all waiting for another tweet. I think that we're getting very close. We need the EU, we need India, and of course, the largest trading partner for the United States is Mexico. So, what's up there? Canada, the economy, recent numbers that have just come out, again, showing weakness. Now, we have Bank of Canada coming up next week, and they're at 2.75. Do they squeak in another 0.25% cut? I certainly think they could probably use it. Mark Carney is a central banker who's now running the country. The question is, the U.S. is at 4.5%. And when you look down the line, ECB 2%, Bank of England 4.25%. Bank of England doesn't meet until August 7th. But to hold a dollar trade, if you're not getting momentum on the downside, this is a costly trade to finance, specifically if you're in the euro, which is the number one trading currency in the world. That's a 2.5% that you lose every day as far as financing that cost. So, it's not going to take much to turn the dollar here. You're right. We're not getting the type of reaction, but I think we're very close to it because we just need a couple of more deals.
So I'm with you there, but where I'm starting to get the concern is the weakness in some of these earnings from the major players that were expected to sort of drive the market. Intel sort of shocked the market to me today. Now they're laying off 15% of their workforce. They're pulling back on their building of, their chip factories, and they're just one of many that we're starting to see in this earnings seasons that are giving those type of same things. Some companies like Sam Adams have done a good job of, avoiding tariffs, but for some, it's just impossible.
Yeah, but Intel has a new boss. It's not going to turn on a dime. It's going to take time. And I think what you're seeing now is, they're throwing out the, reshuffling the deck chairs here. I didn't expect Intel to blow the cover off the ball here.
But I'm surprised that they're pulling back. Same thing, SoFi, the big deal, the biggest deal Trump's done so far, nothing. And they've actually pulled back their ambitions already. So those numbers have already been dramatically reduced. We're going to give you, we're going to invest $5 billion. We're going to stop at $100 million. These numbers have been very, very, very lackluster for what this, supposed shift to make America great. And especially when it came to the chips back onboarding into the U.S.
I don't disagree with you at all that we're seeing kind of like a flat line. Nothing's really blowing the shop up, saying look out, look up. But I'm a forward thinker,
right?
That's what I've been taught and how to trade. And regardless of what headline you want to read, there's a lot of money that is pledged to the United States, whether it's $7 trillion.
But my question is it going to show up, or are they just going to hold out and hope that the midterm elections don't go in the favor of the current administration, and then they pull back that money? So, my thing was he did a great job of getting these commitments very early. We'll see how they play out because there's, time is ticking now.
Yeah, I mean, Right. You can look at the glasses half empty or the glasses half full. I prefer the half full approach. I do agree with that. Yes, let's see, show me the money, and let me see the data that shows dollars coming into the country and building plant and equipment. You're right. So I'm not going to, take the other. I have the other side of that trade. I do believe it's committed. I do believe that these businesses, want to get here. My theory is that the dollar is cheap right now. And that is the doors that are open to allow.
That's what I was wondering. Wouldn't you be, and I guess that's why I've turned different on it, is that I was with you, as you know, very much on the same side of that. And what I'm saying is, if they're not moving in now when it's cheaper to do so for a lot of these companies, are they going to really do it when King Dollar comes back?
Well, I have not seen any data that would say they're not doing it now, other than, I would imagine.
They announced today that they're not.
Who's not?
Intel. So they're cutting back those factories. So they're not building the one here in Ohio as of now.
Yeah. They received a lot of taxpayer money.
That's what worries me, is where did it all go? That's right. What I'm with you. I don't quite. That's why that one shocked me today. It's sort of, I got to do a lot more research. Obviously, it's just one report. But they really shocked the system, in my opinion, because, they were supposed to be the leader of bringing stuff back onboarding and hiring all these people and doing all this stuff. And it doesn't look like that's playing out. So we'll have to see how that works out. What are you looking at when it comes to the currencies across the globe here over the next several days? You mentioned Canada and Bank of.
I'm a little concerned on the euro. They just passed on an opportunity to lower rates. They're at 2%. I didn't expect them to lower rates, but they are talking that inflation, and this is, kind of this dual world we're in. Christine Lagarde said inflation is very firmly anchored here at 2%. So if the Europeans are saying it's firmly anchored, where's the United States talking, that they're not sure? So the central banks of the world are clearly, broken apart from one another. But she did talk kind of, hawkish on rates, that maybe rates need to stay here. They are meeting dependent.
I'm pulling up my notes here, because that's what I was surprised is, her tone caught everybody's attention, I think, because she basically said, like you said, downplaying inflation. And highlighting the Eurozone's resilience. And she's, pretty bullish on where they're at, so to speak. Which also scares me a little bit too.
I totally agree, because I don't think these central bankers are in touch with the real economy at all, as I've been, saying for 6 or 8 months.
Yeah, that's what I mean. I guess, I'm with you. That I guess that's part of my trepidation, is it just seems like almost like they're playing against us. It really does.
They paint a picture that just isn't the reality, because it fits their narrative. If you look at the numbers out of Germany today, they were, lower than expected.
Yeah, so, that's why, like I said, it just seems to me, like you said, that this money should be flowing here already, because there's nothing better. One thing that I have carried that you said that I truly believe is there is, I don't worry about the U.S. dollar dominance, because there's no other place to go. As you pointed out, you want China, they're deflationary at this point. You want the yen, they don't want it. You want, the euro, good luck. And, that I guess is why, I'm trying to understand that disconnect, I guess, is my problem.
So here would be my theory. As the dollar is so cheap, the door is open for everybody to come in with this commitment of money. Okay, whether it is, time will show us very soon. But once this dollar begins to turn, and that's why I'm looking at this higher low that we have just set, keeping it to right to the data right now, we have a higher low in place. So if the low breaks from a week ago Thursday, that's a whole different story. But once this dollar begins to go up, the doors to get in at the cheap dollar begin to close to so much of this committed money from abroad. And that's why I'm watching it carefully, because I believe that you are seeing and will continue to see a lot of dollars moving into the country. You know, a lot of these trade negotiations, if, big if, they reduce the U.S. deficits. Remember, every time Japan, in my entire 43 plus year career, Japan runs a 5 billion plus surplus every month, which means how much do they want to leave in the U.S.? It's a Japanese automaker or a Japanese product. They have to bring the money back home to Japan. So there is a constant overhang of selling of dollars. If you begin to reduce the deficit, the constant 40 plus years of sellers begins to reduce. The psychology in the FX markets is overwhelmingly negative to the dollar. Yet the dollar it has come off since February, but in a longer term chart, the dollar is still elevated from where its lows have been.
Absolutely.
So it's an interesting theory about, what you're saying. Is the committed money coming? Let's see. I believe that the doors are open.
I don't trust any politicians, whether they're overseas or here, from living, so long in DC. So I guess that's why my negativity is slipping in, because I'm like, man, just seems like the same old swamp is back at it again. And that's what worries me.
It does. But then let's look at the U.S. equity market. And if we go to Scott Bessent was like, look, the markets get what we're doing. And that was an interesting comment that he made. And this guy is plugged into the markets. He is a person that's on our side as far as trading, understanding the day-to-day nuances. And, he says the markets understand what we're doing. Now, if I use the overall equity market as a barometer, we're just off or at all-time highs, then something's going on. Would you not agree with that?
Yeah, no, I do. I do believe that he's got a good sense of what is going on. What it is I just worry that retail is too far in and they're not ready for stuff.
Yeah, that's a solid comment. I agree.
And that's what worries me. The institutional money, it matters what you read and where you read it. Is it in or not in the market? To me, you're seeing it come into the market little by little, but it tends to be going to the same names. It looks like, again.
And I think that that's a characteristic of what we're going to expect. The bigger names, the ones that are at the forefront, are the ones that are going to be the movers. The Intels that missed the game, missed the opportunity to make the change years ago, are going to fall by the wayside. So, yeah, it's not going to be everybody. It's not going to be every penny stock that's out there that says, I'm an AI. No, it's not going to be them. It's going to be the leaders in the marketplace that are going to plow the road ahead. Look, if I'm right, you miss nothing by being patient here.
Absolutely.
Because the next 2 to 3 years will be explosive as this reflationary trade that I believe those behind the curtain are about to, are in the process of unfolding. They're going to allow asset price reflation, meaning higher, which is going to help them out of the debt. Just like Elon Musk said, he came out of that government and he went, wow, that was a lot harder than I thought. And the changes, the cost savings he saw, while some of it may get embedded, a lot of it won't. And he's like, it was a much harder job than I thought. So if they can't cut, then they'll do the political thing, which is why we have a distrust of politicians. They will engineer, like out of 2008, an asset price reflation, and it'll holding the line on the debt will suddenly hocus pocus make it look smaller.
Well, I hope so for that. What else are you looking for here next week, Steve, that we got to get on our schedules?
Yes, we got the Fed on the 30th. We've got Bank of Canada, interesting enough, on the 30th. Bank of Canada, 2.75. Wouldn't surprise me to see a quarter cut. The Fed at 4.5%. I keep going out on the ledge saying I see another cut coming. Trump visiting the Fed might have been the gentle persuasion. We do know that some members have been vocal in calling for it. Wouldn't surprise me to see a cut because the rates are still very underlined restrictive in the United States. And then outside of that, it's a pause until Bank of Japan on the 31st. So the evening of the Fed, the Bank of Japan. But lo and behold, the Japanese numbers, the inflation rate has suddenly dropped under 3%. Now, complete opposite side of the coin, Japan wants higher inflation because they've fought 25 years of deflation, and suddenly it's ebbing and coming lower. So I do not expect the Bank of Japan to cut interest rates. I mean, to raise interest rates from 0.5%. And I think that the dollar yen could be a very interesting play here with a surge above last week's close of 148.80. Was still well below that, but a break of 148.80 could indicate to me that we could see the dollar yen, begin to target in the mid 150s.
Awesome. I love it. Mr. Flanagan, we are a little abbreviated. I have to run today. Thank you so much for everything you bring to us. And like I said, I was completely on your side of the boat. I'm now somewhere in the middle of the boat trying to figure out which side I'm jumping to. I love that you're still sticking with your conviction, and you might win me over here over the weekend. Like I said, I got to do more research. That intel shot, the fact that they're pulling back from those factories after getting all that money, and that we haven't seen an uproar yet from, our politicians or the president is what I'm trying to figure out, because they've usually been quick to rally against those things.
Well, and your opinion, my opinion, could be exactly why there's paralysis in the market right now, because everybody's kind of like, whoa, well, show me the data. I want to see more. So.
Yeah, absolutely, sir. Well, you have a fantastic weekend. I hope there's some good weather down there in FLA. You're already looking nice and tan and relaxed. I love it.
Thank you, Howard. Have a great weekend and see you on Monday.
Absolutely.